Commit to Wealth Nation, welcome to the Commit to Wealth podcast. I'm your host, Juan Vargas. Today on the show, we have somebody very special, someone who has done what you guys might want to be doing, and which is raising capital. We have David Thompson. David has been over 20 years in high-tech management positions at Dell, AT&T, and Lucent Technologies. At Lucent, he managed a $2.5 billion investment portfolio and raised over $1 billion in funds for acquisitions. After leaving the corporate world, David started Thompson Investing and has raised private equity capital to purchase over 2,000 multifamily units worth over $180 million. In addition, he's also raised capital for self-storage and mobile home parks. David Thompson, welcome to the show.
Hey, Juan, nice to be here. Thanks for having me. Appreciate it.
Hey, thank you so much for taking the time out of your day and making this happen. So,
right.
Let's start off by telling us where you're calling us from and fill us in on your background a little bit.
Sure. So not too far from you up the road. I'm in Austin, Texas, about 2.5, 3 hour drive from Houston. And been here since 97. As you mentioned, a high tech background. So that's kind of what got me down here with Dell at that time. Still enjoy the environment. Yeah, it's a great place to raise a family, high quality life and low cost of living. So that it checks a lot of boxes. I think we were just ranked again one of the best places to live. So every time I see that, I'm like, maybe I shouldn't move. But the real estate market's also been attractive, right? Texas in general, Austin specifically. And so, that's kind of how I got into real estate in about 2012 with my wife and I buying some single family homes in the area that have done well. And then, as I got into it a little ways, my background was I was kind of getting a little bit along on the corporate route, had done that about 20 years. My kids are getting older. I had one at University of Texas here in Austin and one in high school, and they're getting more independent and doing well. And I just said, I got more time. I've got this passion now growing, as everybody does in real estate. You get started with something. And then fast forward, now I'm doing syndications in large apartments at 200-300 units. And we can kind of talk about how I got into that. But, I was probably like everybody else. I was like, I got that fever and started reading more and talking to more people. And then I ran across people who were doing things I thought was really cool, but I could never figure out how to do it without a job, because I ended up quitting my job. My wife kind of said, okay, well, what's your plan? So I said, hey, maybe 12 to 18 months. I've got this, mentor I found on Bigger Pockets out there who's doing apartments. I'm kind of wanting to get into that space. I kind of understood this, more unit concept of scale, but I couldn't figure out how these kids were. I would call them kids at the time because they're really young. Maybe early 30s to me is very young, compared to where I was in the corporate world, and who were young for the fact that they were buying, 300 unit apartments, right? I mean, certainly I think in your young 20s, maybe you start into, single family or duplexes or flipping houses, but do you really think about buying 300 unit apartments that are 20, 40, $50 million? Last week, we just finished up raising capital on $52 million, 586 units. I mean, 2.5 years ago, I wasn't doing or thinking about that at all. That was just totally, that was like, what?
Yeah, that's a big change. Yeah.
So, So maybe today, with the time that we have, we kind of talk a little bit about, syndication and roles on the syndication team that people can be involved in and participate. So I think it would be really cool. Stand by 1 second. We'll edit that piece out.
No, we're gonna leave it in there. Right?
You like that?
Yeah, I like it.
And I think there's maybe I don't know if it's a misconception, but certainly when I started looking into multifamily, I got a mentor. I always think that's a great place to start. But as I started getting into it, he was his purpose in his program was designed to teach you how to buy an apartment with some friends. I suppose. I mean, you buy an apartment, maybe a 30 unit or 40 unit.
Right.
Well, again, I'm a pretty patient guy, but I was like, where I was in my career, in my life, I was like, I wasn't patient. I wasn't really patient to go buy something like that, wait 5 years, maybe flip it into something bigger. And 23 years later, when, I can't enjoy those assets anymore. I'm doing really well. So when I saw these guys, I'm like, how can they do 300 units so fast? And then the concept of syndication. So instead of, after 2 or 3 months of training, I just asked him, I said, hey, I heard this in the background. He's taking this 300 unit apartment in Dallas, Texas down. I'm like, how does he do that? I'm like, and I started also thinking, Juan, that, I was wise enough to know that it was going to be a team game. Okay. Large multifamily, you're not going to see one person doing it typically. They're going to be a team of 2 or 3 people, and they focus. One person is really good at loving to find the deal, analyzing spreadsheets, looking at markets, that kind of thing. One person on a team may be really kind of a project management guy, really good at asset management. Hey, we got the asset now. How do we optimize the value out of this asset? How do we reposition it, rebrand it? And then there's another person on the team that's really good about raising capital, because these big apartments, they need money for the down payment renovation costs. So we do get a loan, but you need a lot of money. And some people wear multiple hats, but these guys, the guy I was working with said, this is $8 million we need, and I'm going to need some help. And this is going to be great for you. You're going to learn a lot. So one of my number one principles when I'm talking to anybody about this space or anything you want to do in life and in general is, partner up with an expert. If you can partner up with an expert, not ask for a monetary gain initially, you probably get a more open ears on that. But, this actually came with an income component. I was going to be part of the general partnership. I was going to have equity in the deal. I was going to, by fulfilling this role. Now my role was doing some due diligence with him and helping with the marketing materials, educating investors, raising capital, and then taking care of those investors for the life of that project, which meant, sending reports to them and answering questions even during the investment. Well, long story short, I did it. I did $1 million in 2 weeks, surprised him, surprised me. And he's like, hey, by the way, those investors you brought in are your investors. I'm like, what's that mean? It sounds good. He goes, yeah, because you're in a training program, and maybe if someday you want to do all these on your own. So those investors, you're building that relationship with, you're educating them, you're keeping them informed about their investment that they're in. Those are I'm not marketing to them, I'm not talking to them, you're talking to them. And so we started doing deal after deal. And, 2 years later, and I've also added another operator because my investors also wanted more deals, different opportunities in different cities. And now we're doing self-storage, manufacturing home parks. So I've got relationships now developed with some different sponsors. But I'm actually part of the general partnership. Legally, I have to be. I get really one of the best educations possible by being on the team, learning a lot about markets and deals and how they do them and why they make sense. And then my favorite part is talking to investors, educating investors. There's a lot of investors who love to invest in these things passively, have a job, a family, want to know how to do this. So, I guess I'm a full-time part of a syndication team. I have a specific role to fulfill. And maybe to your listeners, knowing that this is an avenue. This is one avenue that you can help out as syndication and operator on, because raising capital everybody needs. And doesn't matter how big they are and successful they are, they seem to need capital to keep growing. Yeah. So you are fulfilling a valuable role. You're getting smarter. You're getting a ton of experience. You're investing in these deals. So I do invest in my own deals, and also with the equity stake we get. So we're getting equity positions and all those. And I'm growing this big investor base that, maybe want over time, depending on your focus. Let's say you decide I want to start syndicating apartments, and I have all this experience operating, and I can find these deals, but I certainly don't have the expertise nor the network to go find this capital. I don't want to spend my time over here. Well, then that would be a person that you might want to call, and we can talk about partnering. So it opens up a lot of doors, just learning one skill.
Yeah, no, that's great. And so I would say that for you, you have obviously built up a big pipeline of investors, right? And a big database. So why not just take it on your own and just kind of, form your own separate, company where you're doing your own deals? Why not do your own syndications?
So the next logical thing is I could do is have my own fund. And all that would mean is I'm a sponsor, and I would still go out and find an expert operator. So what you're asking me is where I think a lot of people maybe get tripped up thinking they have to do everything. You don't have to do everything.
Right.
I feel I'm just part of, I have a valuable role on any general partnership I own as anybody else doing those roles. Some person's focused on different things, or are key principals that are more focused and have more responsibilities, but I certainly feel I'm a part of everything. Now, if you want me to be a lead key principal, you want me to maybe guarantee a loan. I'm in a position to do that. I've done that recently where I guaranteed a non-recourse loan with a apartment sponsor and got a little bit more involved on the key management role. So that's always out there. But I have to ask myself that questions. Am I taking on more risk and more responsibility? And what am I really getting out of that? If my focus is my investor base, do they really care? At the end of the day, they want good deals, good markets, conservatively underwritten, and good healthy returns and a good customer experience. I can go find really good operators. I can bring my investor base to them and we can form a general partnership. I can be a key principal. I can guarantee the loan. So I can get at what maybe you're hinting at anyway.
Right.
Now, the other question other point I was going to make is some operators are very experienced and they have Wall Street money. They have those contacts. But I can go in there and negotiate something with them that's more of a win-win for them. A little bit, I wouldn't say cheaper money, but I am. I mean, it could be cheaper money. I don't have all this, all this big infrastructure around me. And we can go ahead and create a back office and handle a lot of investor things that an operator normally wouldn't want to handle. So not only finding the money, but processing the distributions, the K-1 statements, providing all the quarterly reports. So there's a huge market for that. So I'm going to look and continue to evolve, Juan, and think about things. But at the end of the day, I feel like I'm a private equity company is what I am. I have equity. I have investors. They want to see good opportunities. They want to be educated about the space, the niche. I'm not going to be a Baskin Robbins, 32 flavors. I've talked to a lot of people out there that have a lot of ideas and want to, while I'm in a cattle fund right now, a cattle fund. Okay. But personally, but not my investors. Cause I'm testing it out. And would this be something someone would be interested in? I'm in love also with a lot of different niches. I couldn't just say I want to be a multifamily operator. I'm like, I can find an operator who loves to do that. I'll bring the capital, we'll be a partnership team. And I can be on 50 to 100 partnerships in the next 2 to 3 years, 5 years, no doubt. And just fulfill my role on the team and be a leader wherever I need to be, but I don't have to do everything. If that's the point, you don't have to do everything.
Yeah. So what do you think, because you are basically responsible for your investors, do you think that's a added risk that in itself, because you are basically relying on your sponsors that, on their great work, they pretty much have to do a great job to be able to get those returns that your investors are seeking. Mm-hmm. So you think that, that could be an added risk there because you're not necessarily controlling it yourself?
Definitely it can be. I've got a special report on my website around 10 tips on doing due diligence on a sponsor. And it's basically for investors who are looking at sponsors in general, because a large part of, I think, my success has been educating investors. Hey, if you want to do a deal with me, fantastic. But we're not in a position legally to overly advertise our deals. So it's more about educating people about that. But there is risk. I mean, the sponsors I deal with, I vetted. I actually do due diligence with them. That's part of my role. So I go to the site. Like we do a lot of deals in Dallas. I'm driving up 3 hours and driving back the same day, but I'm usually up there and we're, looking at the rent comps around us. If it's a value add multifamily, for instance, checking that out, talking to the current property manager, the broker, looking around the submarket there, really getting a feel for it before I even invest my own money or my investors' money. And the other thing I look at like this, I do invest in all the deals that I show my investors. So it would almost be like if you got really good at investing and you got really knowledgeable, all I'm turning around and I feel like I'm telling my friends, hey, you have to be accredited, of course, and hey, we have to have a relationship, of course. But once you start investing with us, I want to make sure every deal that you're going to have a pretty good idea what's going on. I take pictures. I'm interviewing people, and I send that trip report to them just like you would expect maybe a private investor equity firm would do, providing my own angle on why I like the deal. Here's some risks to the deal. But you're right. Every deal has risks. And I'm not there on the pulse of everything every day. But we do try to hire the best property managers on site, like you would do if it was your place. You wouldn't be there on every day the situation or decision, but you're relying on that property management company to follow their processes, their procedures, and do ethical things. But at the end of the day, you have an asset management role. You have to give up some of that responsibility. No matter what level you're at, you have to rely on trustworthy partners with good track records, and you have to manage the asset. So, we do stay on top of these assets. I get monthly reports. I review these reports. When I'm in Dallas, I review some of the properties. So, yeah, there's not just here's the capital, I'm out of here. It's a holistic approach,
Yeah.
and we do have that interface with the investor for 2, 3, 5 years. I got one manufactured home park deal right now. It's 5 to 10 year hold. I know for 10 years. Think about it at the time when you're talking to investors, but that's 5 or 10 years. That 10 years is like, okay, what are we, 2008? That's 2028. I'm still making sure that the investor has any questions or reviewing these reports to make sure that the operational team is doing what they told us they would do in the business plan. And I have a voice to go back to them and say, hey, we have a question here. Why'd you decide to do that, or what's going on? So yeah, I have to stay actively involved.
Can you go over some of the key areas that you look for whenever you're vetting a sponsor? Because a big part of my audience, they're also passive investors, right? So they want to know what they should look for whenever they're actually vetting a sponsor.
Yeah, I mean, you'd be surprised. Some of the basic stuff, you can find a lot of this stuff on your own. Like, you go to the website. I like to go to the investors, their website, and kind of, what is that theme? What are they talking about? That's one of my 10 tips. Go to the website. Is this operator in 3 different niches or one niche? I feel more comfortable if they're in one niche versus we're in 3 or 4 different things. I like focus. You can Google the names of the top people. Are they out there in the industry? Are they at conferences? Are they leaders? Are they talking about their industry? What papers have they done? What's their background? You can do criminal background checks pretty easily nowadays. I mean, there's a lot of things. Unfortunately, the internet exposes people pretty quickly too, right? Bad apples. But I just do a lot of searching on those. The other thing is you can rely on people who've already worked with them. So several of the sponsors and operators I've worked with are brought to me by peers of mine who've already done and exited out of these deals with these other operators before. So track record, of course, is always there. On site, when I'm in Dallas, I mentioned, if I interview the property management company, I talk to some of the residents, it resonates loud and clear, the owner and their philosophy. Do they care about this community? Because in apartments, there's a lot of opportunities, what I would call non-quantitative numbers. It's a numbers game, but at the end of the day, it's real people living there, right? It's a community, and you're repositioning, rebranding. We all get that. You're renovating it. We all get that. But at the end of the day, if you do things like have a monthly party with all the residents, that's a pizza party, or just, it's an appreciation, or if there's holidays, you're celebrating some of those holidays, and you're giving a sense of community, you can pretty much tell when you walk on a property whether that's happening or not. If you're buying that property, it's not happening, fantastic. It's a great opportunity for you. But the operators I'm involved with, I want to walk on those properties that we currently own those assets, and I want the residents to get that feel, because what ends up happening is those residents will refer other friends of theirs to stay there, to live there. There won't be as much turnover. Ultimately, it gets to a financial benefit. But, I mean, holistically, we want to do good things in the community. That's important to me. I mean, it's not social investing, but social investing has financial rewards if it's done correctly. And so, yeah, those are, like I said, I got these 10 tips, and I kind of went through them. And a lot of these things you can accomplish on yourself sitting at your home. But some of those things may also be site visits and talking to the property managers and the residents about what's actually happening here, right? Does it make sense?
Right. Yeah, that makes 100% sense. So you mentioned that you also, in addition to multifamily, you also do self-storage and mobile home parks. Why did you go to a couple other different spaces in real estate and not just stick with multifamily? Because that was what you originally started with.
Well, I'm a big believer. I had an undergraduate degree in financial planning, so I got the understanding of diversification quickly in my out of college. But what always dawned on me is that we were working, when I got into this business, we were doing multifamily, large apartments, North Dallas, Texas, from kind of Mesquite all the way over to Fort Worth, the Northern Belt, I-635. It's like, okay, we're just doing it here with the same sponsor. They're good. I get it. The more deal I do with it, the better they look to me and they feel to me, and the results we're seeing the results. But I had investors. What was beautiful about my business was a lot of return investors. They kept coming back. And I felt that at some point they would be so concentrated, it wasn't healthy, right? Now, I'm not a financial advisor, but I would just have conversations with them, and naturally it says, I'm investing with you in these deals. I feel like I'm getting overexposed. Maybe we should look at a couple other niches. So I always think, Juan, about three things. I think about geographic diversification. Texas is a great economy. Dallas is fantastic. But what if, what black swan could happen that would make Dallas not a good place? And so I want to have assets someplace else outside Dallas and outside of Texas. Sponsor, great sponsor, ethical, do the right things, conservative. One day, person wakes up, decides to go a different road. Who knows? Happens, I guess. Happens, right? I don't want all my eggs in one basket with an operator or sponsor, or something happens to him and he can't do his job. So lots of risks there. And then niche diversification. What happens if multifamily falls out of favor for whatever reason? Everybody loves the space. Looks like a great future. I like the space. So maybe there's some other things that people can round out their portfolio. So when I look back at the last 20, 25 years of data, it would suggest in the commercial real estate space, it shows that self-storage and manufactured homing and multifamily apartments are the top three performers. It's not over a 3-year period, 5-year. We're talking about, 15, 20, 25 years. And the reason that is because most of the time when we have a recession or a downturn, those three niches hold up the best. So if we're in a market that's, been going pretty strong since 2012, it can continue for a long time. We don't know. But I still think a lot of people, if you talk to experts, it's kind of a sense that, we're probably in the later innings, if you think about baseball, later innings in the game, and could go into extra innings. But, we got rising interest rates. We got everything's kind of working. Everything's rosy right now. Sometimes it won't be rosy. I want to be in assets that if we have a downturn, in self-storage, people don't throw things away. And so in upturns, they do well. They buy more stuff, and in downturns, they don't throw things away, or they downsize and they store the stuff to the next up cycle. Johnny moves in with the parents, stores his college stuff, or person has a small business. Hey, not works in a down cycle, works in an up cycle. Store the business. So I like that space. Manufactured homes. Affordable housing crisis that we have in the United States, and that whole thing, and it's so much more affordable than even 2-bedroom, 2-bath Class B apartments in Dallas, Texas that are $850 a month versus a lot I'm renting for $285 in Phoenix, Arizona. So I get the mechanics of manufactured home a lot. It's low cost. So I just like those niches. They made a lot of sense to me as I understood them, but mainly for diversification, risk reduction, and just helping people with their portfolio as they start liking syndication and how it works. It's very passive, and hey, I don't really have to do much. I'm not going to be interrupted by tenant calls on the weekends. Maybe for some part of your portfolio, a couple of these niches might be interesting to you, right?
Awesome. So I want to touch on your investors. Let's say, somebody in my audience wants to be a syndicator. They want to find, they want to raise capital for the first syndication. Where's a good place to start? Where's a good place to find these investors and to build that network of and that database of investors?
I'm asked that a lot. That's a great question, and I ask that a lot. I usually tell people at the end of the day, wherever you are, you feel like you're strong, get stronger. It's like I read a book about Michael Jordan. It's like you want to take basketball or baseball. People kept saying, stay with basketball. You're really strong in that. Just keep doing it. He went over to play baseball for a while, but it wasn't suitable. Not that you couldn't try some stuff early on. So I did not know when I came out and started raising capital that the two networks I was strongest in today, the three I'm strongest in today, did not exist really and very strong when I started. So when I came out of high tech, I was like, okay, all the people I used to work with making good incomes, probably more accredited investors. That wasn't really the case because I just left. They're like, how can you be an expert in real estate? You were just working with us yesterday. Right? That was the mentality. I think
yeah.
Like if you, whatever you're doing now, and then you leave and go someplace else, even though you have a relationship with them, you have relationships, they're making good money, they might be interested in this. I got a couple people out of that, but most of them want to see you now. 2 years later, now that's a group to go back to. That could be a superstar network, but not at the time. So a lot of it's timing. The second thing was bigger pockets. Well, it's an online real estate network that a lot of people know about. I started giving things away. What was giving my time? So I'd be in apartment forums answering investor questions. because as I did more deals, my knowledge base grew. Why did my knowledge base grow? Because investors had questions, right? So investors have questions. I just kept answering questions, more questions, more questions. And when I didn't know, I'd go back to the experts, which my partners were, that had even deeper experience, and my knowledge rate grew. I was able to share. So my other thing is, hey, share and give it away for free. So forums, I'd started blogging. My mentor was big on, hey, you got to have some kind of thought leadership program. Like, thought leadership, what is that? Well, that's like what you're doing, Juan. You're a thought leader. It doesn't have to be all your thoughts. You're providing a forum for me to give people my free thoughts. So I feel like I'm an expert in capital raising and syndication and a lot of these different niches I'm working in. So, but you are providing a platform to educate, and you're giving it away your free time to do that. And it's huge. And first of all, I appreciate my time, but that's a way for me to also get out there. So I didn't know those were strong for me. Over time, Bigger Pockets was where I got a lot of investors. I can't advertise my deals, but I would educate people, answer questions, had my blogs out there. People would come to my site and say, hey, it's like you're doing things in the business, and how can you educate me? And I'll read my blogs, or hey, listen to my podcast. I just interviewed with Juan. You can learn a little bit about how I started, and I put your podcast on my website. So that's all thought leadership. But those are the two strongest. That was a strong network for me. The other one was my wife network. My wife's Chinese, and she had an Asian community here that was resonated to real estate, and were pretty good savers. And they got into the real estate game with us early on. So check the demographics with you. What do you resonate with? There's nothing wrong with that. I mean, it's all healthy. Figure out if there's a affinity group that you're involved with, a club that you're involved with. I found that my multifamily meetup group was honestly not a very good place for me to start. And people are like, wow, scratch your head. Now, not a bad place to start. Okay, and when you start, you don't know what you're good at, and you don't know where. You're just trying to find anybody who's talking real estate. That's what I was trying to do. Anybody that can talk real estate. Yeah. I don't know if you're invested. The problem with multifamily meetup groups is that there are a lot of people are there. It's good. I mean, it's good in general, but you'll find a lot of people who are active. They want to do their own deals. They're not looking to be a passive with syndication with me. What a vast investor. Some are. And you have vendors there. I mean, it's a lot of people, and you have 30 seconds to introduce yourself. So it's kind of like you have to keep going every week or every month, and you really have to stay with it a while. And if you have no investors, hey, I was there. I don't care if it was one investor. It was worth my time to drive 30 minutes if I find one investor over time. And so those were kind of the thing. Now, if you ask me now, 2 years later, I think I've raised over $20 million on whatever that is over about 10 deals now. If I look at my investor base, it's probably about 200 accredited investors and probably a MailChimp list of 600 plus people that are, I would say, prospects that have come to my site or I've met but haven't done a deal yet. On every deal I do, let's just put it this way. I'll give you an example. 4 million raised 48 hours, 65 people, average $61,000 a person. Probably 70-80% of those people had done a previous deal. Right? It's usually not that high, 50 to 60, but this is a pent-up demand. I hadn't done a deal with these guys in 6 months. There was some pent-up demand. There was a refinance coming out of a deal that we just did. People had some cash, a little bit unusual. But on average, about 50% of the investors, as you get going in this thing, it gets better. The game gets easier because as you show success, as you show care, good customer experience, that just snowball builds. And so in the beginning, my first deal, 1 million, took me 13 people. And I have all the data for all these deals. 13 people to do 1 million. Now, 2 million, 26 people. It's almost like a math. It almost works out mathematically every time. How many people return investors? How many referrals? So now it's return investors and referrals are probably 80-85% of the money on every deal. Referrals are not given, but they're much easier. If you've done a deal with me or two and you've seen good success, you tell a friend, hey, go talk to Dave. And Dave's already done this a few times, educates them really well, qualifies them, they're ready to go. They're much easier to get in than someone who doesn't even know me and just came to my website. They're like, who is this guy? Does that help?
Yeah, that's awesome. I think those are three good points that you brought up there that people should be active on Bigger Pockets. Always provide value to others. And if you're not going to get anything out of the meetups at the very beginning, it doesn't mean that you should stop. You continue to go out there to those meetups, or if you host a meetup, that's another great way. But
that's a great way.
Just keep doing it. Keep doing it. Keep at it, and eventually something will come up, right? And you may not be looking for investors, but you might find somebody that's sourcing a deal. They need to get a deal off their hands for whatever reason,
right.
Or they know somebody, right? So there's all kinds of different connections that can happen. So. Can you tell us, the three biggest things or three biggest areas that you have learned when raising capital?
The biggest thing is I would just partner with experts. If you start raising capital on your own deals, that's probably the hardest. You have no experience. Investors are going to ask you where your experience is. But if you want to get into, I would say, syndication, and you think capital raising could be your avenue. Hey, you're got a pretty good network, or you're extroverted. You like to educate people if you're a former teacher, or you just like dealing with people. I bartended when I was in college. If you just like people, and you don't see yourself sitting in front of a computer with spreadsheets and analyzing a lot of stuff, the beauty of this business is you can be a player, and you can find a part of a team and to work in this space, and you can be investing in 300 unit apartments in 3 months or 6 months. There is no time limit that says you have to do 25 units and build it up. You can get there super fast. Well, how do you do that? Well, find a team of people that you can provide value to and add value to them. That's really huge. The second thing is when you start in the business, one mechanical thing is always raise more than you target. So if you raise, $500,000 on your first deal, you better plan probably on your first deal to raise at least 25% more than that. And like, oh, Dave, it's already hard enough to raise 500,000. Now you tell me I got to do more. I'm like, well, you're going to appreciate that, because if you fall short and you can't get that deal done because you committed to 500 and can't do it, had you known going in that you needed to raise like 650, and then you have some dropout and you hit 500, then you can thank me, because that is a lesson that's very valuable. Now, I would say the reason why my dropout rate is probably less than 5%, and you should probably already, I still plan for 10 just to be safe. Especially if I have a big investor, like one big investor could ruin those odds pretty quickly. But typically I do $50,000, $100,000 people. That's I can get down to like 5%, and it's not going to bother me. But when you first start out, have a little bit more cushion. The third thing I think is we're kind of talking about at the time is, well, I'll give you a different one. I think it's really important in this space when you're talking to people about money to be authentic. I already talked about thought leadership. So you just kind of check that out as one of those things, thought leadership, and how you build your brand and do it through giving away free information, smart information. But we didn't really talk about authentic. I will tell you, I failed at sales and marketing when I came out of college. Absolutely failed. I had a financial planning role, and I wanted to be a financial planner, and I was like, okay, just like any kid out of college, okay, I got my GPA, I was not very good. Just go out there and get a job, and I was like, let's go out and get a job. No one would hire me. It was first of all, it was a recession when I came out, but also it was, no one was going to pay me a salary to be a financial planner. I didn't research it enough to know that it's an entrepreneurial job. It's an entrepreneurial job. And so I got a job with one of the insurance companies. I think it was Mutual New York or something. One of the insurance companies, and it was basically, you're going to sell whole life insurance and disability policies. And I was like, oh, didn't sound too interesting. and then 6 months later, I was completely out of the business and headed towards graduate school because it just didn't work. And here I went 4 years of college thinking I was going to be a financial planner. Either hadn't researched enough or just got freaked out by the whole thing about, I had a cold call. I didn't know anybody. I had a cold call. I hired a whole cold calling company, and they weren't very qualified leads. And I was doing everything I could to avoid picking the phone up. So I just totally got this thing, Juan, in my head that sales and marketing was never going to be for me. So when I got it, I got my MBA and I got into the corporate world, and I stayed away from those types of roles. And then I left the corporate world. I'm having more success in my life from a business standpoint than ever. And I was a director at some of these companies, so I had pretty good titles and pretty good roles and responsibilities. But I got into this thing thinking, when my mentor turned to me and said, "Go educate some people on these deals," does that sound like sales and marketing to you? I was looking at the deal. I was like, I would do this deal. I had been training with him for 3 months. I knew what a good market looked like. I knew what a conservatively underwritten deal looked like. I knew what a good experienced team looked like. I'm like, I would do this investment. So I felt like I was just turning around and talking to people about why apartments, why is it interesting. I never thought it was a sales and marketing role, and I still don't think that way. And so the reason why I'm bringing that up is you don't have to have that background. In fact, it might even hurt you, I think, because you may have some bad skills or bad practices that you don't need it. People want you to be authentic. So I mentor folks today in the field, in the business. And I have some partners that work with me. I mentor, and I'm all about that. I'm like, listen, if you think you need to be somebody not you, then that's not going to work. Okay, if you think you have to put on this big marketing thing and go sales trials, I'm not saying some of those techniques wouldn't help, but at the end of the day, it's you being authentic, educating people. Isn't that the way real, true professional sales is done? It's not really I just got that impression when I was young that sales was aggressive. It was, only talking about the rosy stuff, and it was always time sensitive, and you had to make a decision fast, or the price went up, and that was my mentality of sales at the time. Mm-hmm. And this is not the way the business operates. There are constraints. I only need to raise so much capital. I only know so much time. But I never want to make the investor feel they're rushed, and I never want to make them feel like there's some kind of special that I'm running to get them in the deal. It's always about, are you suitable? Is this something that you're educated on to make a reasonable decision on? Is the timing right for you? And then I mechanically show them how to get into the deal. And then I tell them, once they're in the deal, how I'm going to keep up and communicate with them so that they don't feel like they just left out and they're in this deal they can never understand. And that's, at the end of the day, has served me tremendously well. And I just want to leave you with that point, because I don't want to get people thinking that it's something that they've never done before they can't do. It's something if you would have told me I would have this kind of role, I would probably shied away from it. But I got into it because I was passionate about it. Right. And I would have done the deal with my own money. That was kind of my litmus test. If I'll do the deal with my own money, then certainly I'm pretty darn educated in the space. I just got to talk to other people that had no clue they could invest in a 300-unit apartment. And then increase in the interesting opportunities that can help them in their passive income goals, right? So
yeah. No, I think if you look at it from the approach that you are offering an opportunity versus selling them something, if you kind of mentally, think of it that way, that because really that's what we're doing. We're providing opportunities. It may not be a good fit for you. But you also might not be a good fit for us. It's just an opportunity, right? So we're not necessarily selling them anything, So that's the way I see it, at least, So
no, that was a good point you made around fit, because I think that eases their concerns. I always tell people when they come to my website, one of my responses is this, let's have a 30-minute introductory call. You came to my site, you're interested in some of these things. Let me give you some free stuff about, the blog, a free blog on why I like apartments, or 25 frequently asked questions on syndication, or, hey, I just did an interview with Juan Vargas. Posted here. You can see me in person. You can see the interview. And who am I about? What's my authenticity? What am I about? But all that's good. And one thing I always say in there is, let's have this call to find out if we're a good fit for each other. Because if you come out with them like, I don't care who you are, I want to do business with you. That's not the right approach either. I've had investors where I don't want to say fired them, but essentially it is that. I've had some investors they're just not worth having as investors, right? It's like 99% of people I deal with, fine, it's no problem. But it's that 1% that I'm like, it's my own company now. I don't have to deal with these people.
Yeah. So you call the shots there, right?
Yeah, that's right.
That's awesome. Yeah. So, what has been one of your biggest failures, or do you have any failures that you could share with us in raising capital?
Yeah, I talked about my sales marketing when I started out, but let's talk about raising capital. My very first deal, I'll share this with you real quick because it's important for the audience, whoever gets involved in syndication and dealing with the money side of it. So we've corrected a lot of these things going forward, but on my first deal, I was using Yahoo. My other partner was using Gmail, and we're going back and forth with things like, hey, in the header of the title, wiring instructions. All the things you just thought,
it already sounds bad.
It sounds bad, right? It's always like,
bad.
Hey, come see us. Here's all the instructions to our bank accounts. And it's tremendously frustrating, sad at the time it happened, but on that 13 investors, $1 million deal, which is our very first deal, my partner had sent me the wiring instructions. Okay. Now, typically those are in the offering memorandum, the PPM, and usually they're sent to investors today by DocuSign or secure environment. Typically they could be in a secure portal, but you don't want to be sending bank information, wire instructions, through your email like that. Okay. And we were. And so I just took them and whipped them over to my 13 investors. And I got a call the next week from one of my investors. Said, hey, I just got called from one of the largest banks in the country, one of their global security departments, said the $50,000 I just wired to that account is a fraudulent account, or it doesn't no longer exist or something. Well, long story short, 4 out of 13 investors were impacted for $225,000. And the FDIC, I found out, and I talked to the FBI, and this became an issue. because they insure deposits, but they don't insure wires. So if you wired something, now if you wired something to another account that was the wrong account, typically you'll get the money back. But if it's a fraudulent account, someone's set up a fraudulent account at that bank, and this is a legitimate bank, which is surprising. But you can go into a bank and you can say, here's my company, and sign up, and they're supposed to be doing some screening, but I don't think it's very good, because what happened is some bad actor opened up an account, and it was called a phishing scheme. They intercepted our email and sent me the email that I got from my partner went to my spam, the original one, and it was replaced by this fraudulent email that had different information.
Wow.
It was pretty much legitimate. I looked at it and said, the guy's name, but it's after I found out later, I went back to the email. One of the letters was transposed in his fine print on his name in the back, so it was sent from someone else's server. Anyway, him and I came together, and we realized that we're not sure who was to blame, but we needed to correct the action. First thing you do is in those situations is as much as you do panic for a few seconds, is like, you got to just, damage control. Okay. I didn't know if it was 1 or 13 investors. 13, that would be $1 million. It'd be hard to cover. We sent out an email to everybody and asked who's been to the bank and wired. Well, before people had wired to the tune of $225,000. And we said, okay, we explained to them separately what kind of issue happened, and that their money is in the deal. Okay, our money was going to be replacing their money in the deal. My partner and I were going to come together and put money in the deal. They're in the deal. $225,000. That was that just wiped out a whole year's earnings for whatever we were trying to do, I'm sure. But it was a tremendous learning experience. But those 4 investors were in the deal. The other 9, we never informed of that kind of an issue. We just said, if you haven't wired, here's the new instructions. And we got at least one guy saying, why would you change? Well, no worries. Our lawyers said, made sure. So the 9 of them didn't know what was going on, but we got the correct information to them in time. 4 that were impacted, we said their money is taken care of. So they needed to make sure that wasn't going to be a problem. We immediately went back and redid all our procedures. Never did that again. I got my own, David, my own email, my own domain. He's got his own domain. We're doing everything inside of the network now. We don't share any sensitive information in email. Everything's more secure. So 100 times better than what it was. But I still hear, when I was talking to the FBI, it says it's really rampant out there. Title companies are big targets for it. And when it happens to you, you're just like shell shocked, because it looks like when you look at that email, it looks like a legitimate email. So I just I train folks on it. I tell my investors, before you go to the bank, I don't even care if we send it in DocuSign to you. Give me a call right before you go to the bank and tell me what the account number is and the routing number. So I go to even an extra. They don't always do it. They don't always call me, but I just tell them. I want to be extra sure that even the DocuSign wasn't tampered with. But anyway, I would say we're 100 times better than we were. But that was an eye opener. It was probably one of the worst financially devastating days of my life for sure. But I ended up having the courage later to be on a podcast. And Paul Moore had, his podcast about losing money or whatever.
Yeah.
And I had the courage enough to go on, because now I felt like I had a reputation that was good enough now that I could talk about a situation like that. I was a little bit nervous in the beginning to say, well, guy loses my money. But what was really good, what was maybe most satisfied about this, Juan, was that 3 of the 4 investors reinvested with us. One's become one of my best investors. He came from an IT competitor where I came from. So he had an IT background. He specifically wanted to see the procedures and changes that we did. So that's another thing you can do in a bad situation. Just, take fast action, be as calm as you can, correct the situation best you can, which, basically told the people the money's in the deal, make sure no one else was impacted, have a correction action plan, show people you're serious about it. It's not going to happen again if they invest with you again. So, looking back on it, that's all things you would do, I would do, but you just want to think through that steps pretty quickly. If it was $1 million, I don't know what I would have done. Honestly, we would have figured it out. But 200,000 plus was a lot of money. We figured it out. We plugged it up. But yeah, it was a painful lesson. But it will never happen to me again. And we're probably more secure than we've ever been. And I'm happy to talk about it to people that are in the business, because I never want to see that happen to anybody. Yeah. No,
yeah, that's awesome. And thank you so much for sharing that, because I think that's something very important that we we don't necessarily think about so much. We think, it's going to be fine. It's not going to happen to me. It'll happen to somebody else, but why would it happen to me?
Yeah.
And so I think it's something that we always should keep in the back of our minds and be, try to take those safety steps, to try to avoid that. So, thanks a lot. So Dave, I think it's time for our nuggets of wealth. What key tip or advice would you give to others who are looking to get started or take their business to the next level? And I think you already touched on that, but any other tip or advice that you would give?
Yeah, I mean, first of all, you got to feel like you're passionate about it. I mean, I think that fuels, Juan, what you do and what I do. And it was night and day when I left the business world. It's like having your own business and your own direction, your own destiny. And if you're excited about that, that's number one for me. Like my passion, like I interview people on podcasts, like, yeah, you're so excited about it. Like, I got my own business and it's going well and I'm having fun. And, people are happy with who I'm working with and things are working. And, and so that's a lot. I think if you feel that energy, like I always think about this is like, what do you read when you're tired? When you're not tired, but like, what do you read after work or after, you spend some time with your family when you're just sitting around, you got free time. What are you doing? If you're reading real estate books and stuff like that, that's probably a good sign. That's an area you just should explore more, and certainly find the niche or two that kind of attracts you, and then find out who the experts are in that niche or whatever. If you're going to conferences or you're going to a training, and really give yourself the benefit to explore that passion and take the time and give yourself time to do that. It's not going to happen overnight. It's taken me 2.5 years. People would say that's really fast. Well, yeah, but it can happen fast. But I can tell you from the very get-go, I was passionate about it, and I got around the right people. And if you can get around the right people who are actually doing that in an active way, and then try to do something that you can to help them. I have people asking me, I have a difficult time sometimes telling you, I don't know. I know there's a lot of things I'm doing that I probably shouldn't be doing, and I know you could probably help me, but so it takes the time for both people to figure that out. But it's a good way to start. That's how I asked my mentor, how can I help them when I got kind of like, this isn't really going to go as fast as I thought, and how can I kind of get going? He says, well, you can help raise some capital, or you can help with some due diligence, or you can, and I think a lot of people are willing to help you if you show that passion, energy, and commitment to them, and not trying to get something for nothing, and you're just trying to give of yourself. And just explore it. And maybe 3 months, okay, that wasn't what I want to do. Maybe it ends up being a career of a lifetime, and that's what this has happened for me. I never thought capital raising and being part of a syndication when I started it, even 2.5 years ago, is where I was today. And even now, I'm thinking, how's my business changed? Oh my gosh. You don't have to have it all lined out. It morphs. Your business morphs, right? It changes over time. Yeah. Now I'm thinking about a private equity company. Now I'm thinking about an infrastructure on the back end to handle investors, the whole back end part of it. And now I'm thinking about bigger partnerships. I got off the phone this morning with a guy who raises about as much as I do. I'm like, why don't we go look at bigger projects? There's bigger projects out there. Let's go look at those. And maybe we can, what do you like? And he likes ATM machines, and he's into assisted living. I'm like, assisted living, that's my fourth niche. I'm really interested in that. And, I got a guy over here that finds operators in assisted living. He's going through all that. And why don't we so then it becomes more the network and partnerships, because your passion, my wife has to tell me all the time, well, you're working 3 times you did at your corporate job. I'm like, it's just, I feel like I'm in a candy store every day. I'm like, I don't know. I mean, I'm like, at some point, I mean, it's like, I could talk on and on, and, we've probably gone too much on your interview here, but
no, it's good.
You can just talk. I mean, we just talk. Yeah. And if your passion will fuel antennas to go up with other people around you, and they're like, hey, I know some investor that is interested in that, or hey, I know someone who's an operator that does that, or hey, I know I've got a buddy that raises capital like you do, and what if you team together? And you asked me that question, what if you want to, why don't you want to own it? I own it. I own it. I am an owner. I am an owner. I'm just doing it. I found out my role in that ownership position. And now I could just go ahead and invite partners to come in and team up more of it. Because I find this business is really about partnerships more than just solo stuff. I mean, if you're a house flipper, I met a house flipper the other day from Austin. He flips 50 homes a year. Really good one-on-one meetup, and he wanted to get into multifamily. Was talking about it. I'm like, dude, like, you're the best I've ever talked to about flipping houses. I'm like, but I think he felt his buddies were doing something bigger than him in commercial real estate, and we're making so much more money. I'm like, oh, well, maybe if you're passionate about it, you'll find it. So here's 5 people to go talk to. I told him, talk to me if you like to talk about money. If you want to talk to this guy about developing relationships. Talk to that guy about spreadsheets. Talk to this lady about, and so I gave him like 5 names, and like so now I feel like I can give back. Right, I met this network, and I want to see Juan you successful. With me or listeners, hey, if I can turn you on to somebody, go talk to them. But get around people who are experts, and even if they're singular at what they're doing, maybe that's the best advice for you.
That's awesome, man. Yeah, that's just like some great points. And if you guys can, at least take some of the points that he just mentioned and put them to use and actually make it happen. Don't just sit on the sidelines and, actually have a passion for it and make it happen. And everybody can be successful in this business, and
Absolutely.
just being surrounded by the right people, being surrounded by the right people and having the right attitude. So definitely. David, where can Commit to Wealth Nation go to find out more about you and Thompson Investing?
So email is david@thompsoninvesting.com, THOMPSON investing, all one word. I was trying to find Thompson Capital or some kind of a noun. Is it a noun I was trying to find? But it's so often you have to find something that's ing.
Yeah,
a little bit interesting, but I kind of feel like I'm in motion. Investing, I'm in motion all the time looking for something.
Yeah. No, that's good. That's good.
But I have a website, and I've got a lot of my blogs on there. I've got these interviews. Juan, I'll put yours on there when it posts, and all about education. And if you're not a if you're not accredited, or you're not, just trying to figure out the space, I've got levels of just information for newbies all the way up to more experienced people. So check us out, and we're happy to contact you or whatever, and we can share some more ideas. Right.
Definitely. So, David, thank you so much for your time, and thank you so much for so much information that you shared with my audience and myself. And I wish you the best. I wish you continued success.
You too, Juan. I appreciate the time. It was fun. Take care.
Yeah.
All right.
Thanks.
Bye.
All right.